So I break these walls and hold my head up high, and I step my ground until the day I die. As the rain falls down, there's no more tears to cry, tears to cry. So I break these walls and hold my head up high. No, I'm not giving in. No, I'm not giving in.
I can't take it anymore. My mind's about to go to war. I need someone to save me from myself, to hear me cry when I call out for help. I blame it on the voices that are in my head, wondering if they'll ever be put to bed. Feels like I am close to reaching my wit's end, holding out but I'm about to blow it up like a volcano. Another day to lose control. There's a fire in my bones. My sight gets blurry, pushing back the tears. Should take a leap of faith and face my fear. I blame it on the voices that are in my head, wondering if they'll ever be put to bed. Feels like I am close to reaching my wit's end, holding out but I'm about to blow it up like a volcano. Like a volcano.
All right, guys. What is going on? What is good? What is good? I hope everyone is having a phenomenal Thursday, May 18th, 2023. See if we can pull the mic just a little bit closer, and we should be good to go. Should be good to go. Know what I'm saying? So welcome. Welcome to our first stream on Thursday. You know, we did a market review on Tuesday. And now we are doing another market review here today on Thursday. So, let me see. For sound check, guys, let me know that you can hear me by dropping a like on the video. That way I know we're good on sound. What's good? Ali, Miguel, Josh, Naruto, David, George, and Mr. John are in the chat today. Very nice, very nice. Oof, man, but what a week, though. You know what I mean? Like, what a week. It's been crazy. It's good, Nicholas. And we need to see if Miguel or Trillionaire, we need to see if they're here. What's good? Cormant Maxime? I don't know if I said that correctly, but what's good? So we don't have too many people on here. I'm not sure if everyone's used to the YouTube schedule just yet, but we're still gonna rock with it. Know what I'm saying? But it's going to be short today. It's going to be shorter than normal. I don't have to be here at all, really. But I don't have to be here for a full hour is what I'm saying. So actually, a lot of the times, if not majority of the time, when I do market reviews, it really shouldn't take an hour. Oh, Jorge? Okay. Sorry. I'm English, bro. I try to say everything in English. So, sorry. I'll do my best, all right? What's good, Keith from Miami? Oh, yeah, we got people all over the world. All over the world. I love it. But yeah, like I was saying, market reviews honestly really shouldn't take more than 20 solid minutes, okay? To be here for a whole hour, I'm going to talk your ear off, and that's not my intention for today. Okay, it's not my intention. I don't want to do that. Plus, I got other shit to do. So I'm definitely gonna go do that. You know what I mean? But we're gonna handle a little bit of business first. Knock that out of the way, and then we can all get on with our lives. What's good, Milton from Atlanta? See, that's another thing too. I gotta now I have to figure out who everybody is because all the names are different. You guys don't have the same names anymore, so I'm all like, who is who? You know, who the fuck is who? So we're not going to get into the mitigation model today, but I want to show you simply what a basic mitigation is, at least how I look at it. Some people call this something else. There's all kind of names for it, whatever, but you know, like I always say, names don't matter, context does, okay? I remember you from Zach. Yeah, Zach and Jordan's channel, yeah. Appreciate that, John Wick, for making it easier for me. You know, some people don't make shit easy for John Fit, but you know what? We're gonna fucking work with what we got. All right, we're gonna do what we can. So, a classic mitigation, okay, simply by itself. So if we don't add any context to it, it's a low, high, lower low, okay, and then a higher high, and that next retracement is usually where you want to start to look for longs to go higher. Okay, now obviously it goes a lot further. You know, there's higher time frame context, there's other things that we look for, there's the timing aspect of it and all that. But in very simple, you know, basic terms, this is what that looks like. Okay, minus the bad. Are we good now? What the fuck was that? My bad. You know what? It was the keyboard. That's what it was. But this is why I always check the chat. You see me go back and forth? Just in case some shit ever goes down, I'm like, all right, I'm muted. But I didn't say anything that was outside of the framework of what I'm drawing for you. Okay? So, look, I'm not perfect, all right? I take losing trades. I fucking mute the mic on accident, all right? You know, I cuss. Okay, I'm a man with flaws, all right? But I didn't say anything that was outside of what is in front of you, okay? High, low, higher high, lower low, and this is where we start looking for shorts to potentially go lower, okay? So, yeah, sorry I don't have any fucking cool effects and transitions and all that other shit, okay? I don't have all that other shit. Okay. So now that you guys can actually hear me, okay? That is the basic mitigation by itself, okay? So if you saw on Twitter today, we had some fun on Twitter. And it's funny too, because if I call it right before it happens, nobody sees it. Then they all got to come back afterwards. That shit is always funny. You know, they're like, what the fuck, John? Why couldn't you just call it in advance, bro? People don't actually do that, but it's just funny. Okay, so if you actually go look at my tweets today, I had a little fun. I had a fun with the annotations. I'm not gonna lie to you, but I sent out a tweet at 10:47 a.m. right here. Now this was just prior to where I was looking for shorts. Okay, I said wildly mixed this week for indices. Okay. I usually become more skeptical when they are this out of sync, and they are wildly. Literally, it's Nasdaq was flying and Dow was lower. It was horrendous, but it's cool. So it's harder to see the better opportunities. And then right here, okay, so this was your needle in the haystack. Dow is weak today versus other indices. Nasdaq running higher time frame liquidity. So what does that tell you? Well, it tells you that we're mixed, but the Dow is weak and Nasdaq is, you know, running higher time frame liquidity. Will it continue to run higher? Well, fuck, I don't know. At 10:47, I don't know if it's going to continue or if it's going to reverse. I have no idea. But I'm not looking to short Nasdaq. I'm looking to short Dow. Okay. So, a few minutes later, all of a sudden, we start trading lower. We start creeping towards these lows. So I had a little bit of fun and said that that the butt cheeks are tight right now for anyone who's long. And then the low got taken. And as soon as it was taken, I tweeted that the longs were wrecked. So I want to get into this, okay? Because I feel like some people may not understand, like, you know, how can we do shit like this? And you guys can see the markups though, right? Longs clenching their butt cheeks down here. And then this high, okay? Longs euphoric. Screenshot, curse, cast a spell, spooky like, and London's high taken. So that actually gives you quite a bit of context. But The 1 minute chart is really to show the tweets. The 5 minute chart is actually where everything was happening. Everything was taking place. So, and this is one thing that still bothers me to this day, and I don't think really anybody's ever given me an answer for this, but the micros and the E-mini were slightly different, and you're going to see why today was fucked, essentially, because let me explain something to you. All right, so given what I just gave you with what a mitigation looks like, we did the long version and we did the short version. Okay, so you got to see both. So now if you can look at this chart, do you see something similar to that? We're going to go back to candlesticks because the wicks look pretty good, but the closing basis doesn't look all that gravy. Sometimes it does, but not today. Thanks, Kevin. I'm glad you guys like the sense of humor. You know, trading is supposed to be boring. I mean, it is, but you gotta spice it up. You know what I mean? You gotta add some razzle dazzle to your analysis. But continuing on, what do you see here? Because I only talked about mitigation. I didn't talk about anything else. All right. Boom. Okay. Now, again, let me finish what I'm about to tell you. But the mitigation is this down candle here. Okay. Now, what I was trying to do, I had an order at 33,505. Okay. So this is the part that's fucked. Are you ready? Well, probably not, but I'm going to tell you. So that I had an order there, 33,505. Okay. And what did I want it to run for? You saw the tweets already. You saw what I showed you. I wanted these lows down here. Okay. So now why is that? Dow is our weakest index that was given to you. You probably saw that anyway by seeing what the NASDAQ was doing. So, you know, if we are going to short, and the market was like obviously very bullish today, but if there's a index or an asset that we are going to short, ideally it would be the weakest one. That's one of the smart money trading rules. You know, that video's got a little over 800 views, so I'm pretty sure that you guys have seen it. So we want to, I think it was rule 9 or 10, you want to short the laggard, not the leader. Okay. And again, as always, not financial advice or anything like that. Okay. But that's what I look for. So if Dow is our weakest index, that's when I want to look for shorts on. All right. Now, the confluence here, if you will, was this imbalance here. Okay. And on a 1 minute, this was a short-term high, and I'll zoom in for you. Okay. This was a short-term high right here. See that? So my order was just above that high, right? Your stop loss is my entry. You know what I'm saying? Fuck them. You know what I'm saying? Oh, John's got an ego. Like, no, we've been on this shit. Okay. We've been on that. Short-term highs, we know can get swept. Now, we don't see that on the micros. We don't see that. Okay. So again, I want you to understand. We took this high. How do I know the high has been set? I taught you that the other day. I taught you that on Tuesday. Remember, we looked at the NASDAQ and the S&P, right? S&P made a lower low when the NASDAQ made a higher low. That was the low for S&P, and then it ran higher, right? So invert that idea here, only there wasn't like I don't think there was a divergence, but this is still manipulation though. Okay. Because we have a high, low, higher high that took London, right? So anyone who was short during London, if they had a stop up here, boom, they got ran out. Price breaks down. See that? See that breakup structure? Okay. Right here. All right. Now watch this. Watch this. This never gets filled. It never fills me in. Doesn't do it. However, if we go to E mini, it was perfection. 33,505 was met. So again, you know, my understanding of the market, okay, I would say it's a fairly high understanding. Is it the highest understanding? No. But I would say probably well above the average. But what I still have questions about is Jesus. Is why does micro say, fuck it, we're not going to run the high. We'll just create equal highs for later. But E mini does do it. And it runs straight for the lows. I mean, look at that. That is a crisp, clean 1 to 3. And that's not aiming for anything further. Because realistically, I can, well, I didn't want to really get into it today, but I guess I can show you a lesson on knowing, or at least being able to have an educated guess on how far the market is going to go beyond equal highs or beyond equal lows and things like that. Because I still feel like that might be a bit of a struggling point for traders. Do you guys think that would be a question worth answering? How far below the lows is the market likely to go? Would you guys say that you would want something like that answered? Damn, I don't have a drink. I'm about to get cotton mouth like I'm a motherfucker right now. Would you say it's best to always compare the micro and the E-mini before making a trade? I mean, I like looking at both, but when they do different shit, that's what throws me off. Because otherwise, I would have absolutely slapped today around. I mean, literally, I was trying to short that down to this level here. It's actually a little bit further down. I was trying to short that, but I never got filled because I was trading the micros and never did it. But I watched E-mini literally go to my order 3 points past it. Like 3 ticks beyond that, and then dominated to the downside. So it feels good, like knowing that I did that, but my order wasn't in on E-mini, it was on micro. And that's the shit that I don't get sometimes. Like, why? Why didn't you do it? So it's cool. All right. So here's your note-taking moment of the day. And this is not going to be the greatest breakthrough that you'll ever have, but this is what I prefer to do. Now, if I'm trying to get the lowest low or like the highest high, then what I will do is this, okay? What you need to do, and you please backtest this, okay? Let's go back to my 1 to 3 for a minute. My 1 to 3 was drawn where the low is like the TP, okay? However, I never expect equal lows to just barely go like 1 tick and then reverse or whatever. Like that's not what I expect, okay? There usually is going to be some degree of movement past the lows, all right? So this is what I would typically do. I'm going to go back to E-mini though. Since we are on a 5-minute time frame, we were. Okay. Whatever this low is, 33.7, okay? What I'll do is I'll zoom out and I'll look to the left, okay? So I don't draw anything per se, but I look at it. So I look at the low and then I go immediately left and I look below it. Okay? So then I'm analyzing whatever price is below that. So there's like an imbalance up here, but the lows are below that. So we're really looking for something like in this area. So I think it was actually the 15-minute that looked a little bit better. Yeah. So the low is at 33,338. You guys see that? Right there. So if you look at what's right over here to the left, there's an imbalance right here. So I'm not really too concerned with that, but there is another one, like DJ Khaled would say. Okay, so that is typically what I would try to reach for. So there's a 20 level right there, just below the lows. That might be reachable since it's a 20 level below the lows. And if it overshoots that, then there is an imbalance down in here. Okay. And then, boom. All right, look at that. Look at that shit. Beautiful. Okay, beautiful. So how do you know? This won't be every single time, but how do you know how far the market is likely to go if there are equal lows? Well, if there's an imbalance, the 5-minute looks kind of like not as clear, but there's like a much lower one right here. If you can see it, but the 15-minute to me was just structure, like cleanliness. It was just a little bit better on the 15. So I drew it there. Okay. So now if you look at it from a 5-minute, so if you want to back test, okay, if you cannot frame a 1 to 3, like let's say you just shorted the mitigation with a stop at the high, all right, that run to a new low is a 1.85. So if you extend down to the imbalance, it does make it better, 1.22. But, you know, if you would take something like that, if it's not a 1 to 3, then you're going to have to even aim further, which good luck. Sometimes, because it's not going to, you know, price is not always going to go down to your risk reward. Price is going to go down to, you know, where it's going to be repriced or manipulated to. So the market doesn't give a damn about your risk reward. But if let's say this is your imbalance, right? The one that I was looking for. So if a 1 to 2.2, it's not enough. Okay. So I do one of two things. I'm either going to go to the high of the candle that completes the imbalance, or the body of the highest up candle. Okay. So if we do the high of the candle that completes the imbalance, that takes it down to a 2.7. So it may need to be the high of that up candle. There's your 1 to 3. Okay. So your entry was not the greatest. Like if we did the YM, it wouldn't have been that great. The imbalance is where the better entry came in at. But for sake of, you know, studying purposes, reaching that imbalance, there's your 1 to 3. Okay. There's your 1 to 3. So what have you learned today? Well, it won't be like this every time, but if there is old price action, which most likely there's going to be, especially on an intraday basis, if you have lows or even highs, okay, you need to see if there's an imbalance above them or below them, okay, and price will usually be able to gravitate towards that. So once that occurred, obviously you see what the market did in the afternoon. We took flight and see you later. All right, but that was the trade I was trying to take today. Outside of that, I didn't really have anything else besides gold. What have we been looking for on gold the last couple of days? Again, they're in the recordings. You can't fucking, you know, you can't fix that. They're on YouTube. They were posted days ago. We had 1969 on our charts days ago. And obviously the market has surpassed that. We're in the 1950s. So it's always nice to be able to see stuff like that. You know, so gold definitely trading lower. We said that if gold were going to go lower for that, then that means silver would continue lower. We're seeing that continued lower movement on silver. So there's a quick, brief update for the metals. If you've been trying to long metals, good luck to you. Okay. I mean, maybe now, maybe, but I would not long just yet. So, because we still have some more clean lows over here that we may end up wanting to reach for. But, you know, it's Thursday. We do a market review and of what we talked about earlier in the week. We talked about these levels. There you go. Okay, there it is. And I don't remember what else we talked about. Oh, you know what? That's right. So someone asked about Australian dollar being bearish yesterday, and I said I didn't see anything bearish about that. And well, we ended up being fucking super bearish from that. So, hey, like I said, I'm not perfect, man. I'm not perfect, but I would have waited because you did have news yesterday. So that was actually last night. So 22 hours ago from right now, there was Australian dollar. There must have been interest rate, cash rate, I don't know, something. And that ended up shooting price lower. We do rebalance a little bit. And then, yeah, it was bearish then. So that's great. If it was me personally, though, I don't know if we mentioned this or not, 62.23, that ended up being some cleaner lows for New Zealand. So again, I don't know if I mentioned that or not because I don't remember. We stream 2 to 3 hours a day, fucking every day. So a lot of stuff I don't remember, especially when it's questions that you guys ask me because I don't watch these a lot. So I don't remember. But if I failed to mention it, then apologies. But I would have preferred New Zealand over Australian dollar just because of the lows that were more clean, if that makes sense. So I would have been trying to maybe short something. I don't know. This chart looks like shit, to be honest. It doesn't look good. This looks horrendous to me. Yeah. That looks terrible. But yeah, I mean, either way, it was there. I mean, I think we ended up, I guess, creating a high at that 1 hour imbalance from the 11th, I guess. And that was, I don't even know what that was. But either way, that created our high, short-term high, manipulated, price broke down, then a imbalance, then the run on the lows. Okay, so study that. Even though, again, I think it looks like dog shit. Breakup structure, right? So it shows like a quote unquote willingness to trade down to these lows, and it rebalances during New York just prior to the sell-off. I mean, to me, that's a little late in terms of entering the market, but in hindsight, yeah, that's actually a pretty decent move. So there is that. All right. I guess we can pull up JP Morgan at this point because I wanted to give these stocks a little bit more time. I wanted to give them some time before we give you an update. So I still believe in the 145 level. When price does consolidate for a while, there's nothing that I can do about it. Like there's nothing to do for me in here other than just wait. So if you look at JP Morgan on a daily, it doesn't look bad. But what are these levels here? If you look at a weekly time frame, okay, the week of April 10th. Yeah, that earnings gap from the 14th. Yeah, whatever. That gap that sent us higher, that's going to give us a weekly up candle, okay? However, there was a gap back in here, and we gapped through that. So it is a little difficult to see on a daily. It looks kind of chopped. But if you have those levels again, like on a weekly chart, okay, there's this gap right here. And the one, I guess, on the weekly was Friday and this Monday. So like right there. So yeah, there was that gap down here and that gap up from the earnings. So there was really not a lot of trading between 134.60s and the 132.12, like between those two, right? So if you draw that out, we traded back into that on May 4th, right? That whole Star Wars fan day, right? May the 4th be with you, or whatever the fuck. Well, may the imbalance be with you to fucking send price higher. You know what I mean? How about that? Can we get that? You know? So I did go, I don't remember which day I went long again. It might have been that day. If it wasn't, it might have been in here. I'd have to double check. But yeah, I'm definitely long on JP Morgan. I probably spent too much, just so you know. You know, like whatever the risk was, I didn't put the house on it, but I put fucking, let's just say we need to get to 145. All right, we need to get to 145 and we'll be blessed. So given the NASDAQ, all right, cool, but I don't think JP Morgan's in the NASDAQ, but JP Morgan is in the Dow. And the only thing that's propping the Dow, in my opinion, I still believe in 34,500, maybe 35K at some point. We've been in this imbalance for a while on the daily time frame for the Dow. So to me, I would need probably the Dow to continue to trade higher. If we end up getting the triple highs, then great. And then with JP Morgan, hopefully that also sends us above 145. And then 147 or 148, I think that's just a gap fill on the weekly time frame. So you remember how I told you about when we just got done with the Dow Jones, about how we had equal lows, right? But if we expect the market to go past that by a certain extent, there should be an imbalance or maybe even a gap that's below that. So if you invert that idea on the weekly for JP Morgan, there's a gap up here, which is above the highs. So that's why I have two alerts, 145, or basically 145 and then 148. So if we end up getting a decent run over the next few months, hopefully we rally for the rest of forever. I mean, that would always be nice. That's not what I'm trying to say, but every once in a while, what I'll do is, if you can get in like a good stock position and it just runs away, like that could just be, you know, long-term shit after that. Because like the way I look at it, if you longed in the 127s, the 128s, right? And we're in the 140s, you know, now you have a much bigger buffer, you know? So if you let it go and it runs, you know, like imagine I said we were going to be here 30 minutes and it's already been like 40. We had this gap. We met this gap back in October of 22. So like 10 months ago, 11 months ago, something like that. I don't know how many months that is. Quite a number of months ago, right? So if you got in at the 110s, 105s, and we're at the 140s, that's a huge buffer. You know what I mean? Because if you actually look at stocks on daily and weekly time frames, if you're ever able to get like a really good price, dude, they run for like forever. Okay, I started trading stock in 2014. I don't know if you guys can see that, right? And if I bought JP Morgan in 2015 or 2016, I mean, you look how, if you were able to get in and you get a good price, it just takes off forever. So hopefully we can capitalize on that. I mean, if it does it, I don't know if it's going to, but the whole idea is I want to pick up shares, a few options contracts as well. We get to 145. you know, hopefully, again, this is in theory, this is the idea. You know, you buy in low, sell it higher, but you don't sell all of it. You know, you can sell, let's say 70%, 80%. So you're out of it, you know, you're not out of it completely, but I mean, like, you're taking a lot of the risk off. You're getting back everything you put in, plus a little bit more, right? And then you're leaving whatever's left to run. So that to me is a better utilization of capital than to always constantly try and find trades. Okay. Like that one IRA account I told you about. I didn't check the dates still, but I remember I bought somewhere in here. It was one of those days in there. It was like 265, 268. It was something in the high 260s or mid 260s. Okay. Triple Q's is at 337. You know what I mean? So throughout this whole debacle, I mean, yeah, there's a little bit of heat there, and sometimes price does consolidate, but I'm not worried about that. You know, because we can do our swing trades over here, and we can do our, you know, intraday stuff on the indices over here. All the while, you have a long-term account that, in the long run, is able to do something. You know, so to me, it's just a better way of putting some capital to work that doesn't just sit in a bank and collect dust, you know? So hopefully we do get that with JP Morgan and then Wells Fargo as well. So Wells Fargo, it retraced deeper than what I liked. I didn't want us to go back below 40, but now we're back above 40 again. So, I mean, it looks okay. It looks all right, but obviously it was the wrong one, right? Because you see Wells Fargo and you see JP Morgan. I think there was just a lot more emphasis on JP Morgan versus Wells Fargo. So, you know, it is what it is, but I still believe in Wells Fargo. All right, well, again, just give it more time, and this is why I take long-term calls. Leaps, some people call them leaps, okay? Because I might long right into that gap. And it may go my way for a little bit, but then it may come down a little bit more. But I can just get a little bit more and pick up another contract or a couple of contracts, pick up some shares, you know, leave it at that. And then now we're starting to get our run. Because I was a little bit worried for a few days. I'm like, all right, man, what the fuck? Because when you trade options and price doesn't do anything, your shit, it goes down, bro. Like it's not good. You know, like price needs to start running and it needs to start having some volatility. So yesterday was blessed because, I mean, Wells Fargo had like a 5% day or 5.5% day or whatever. So yeah, yesterday was great. But yeah, that's going to be it, guys, because I got some things to do. So hopefully, and write this stuff down too. Like in your journal, write this stuff down. Write down what day it is. Okay. It's 5/18/2023. Write down what I'm telling you, 145 and 148 for JP Morgan. And whatever else we talked about. Wells Fargo. I don't have a date on Wells Fargo though. But, you know, 44s, 45s, you know, something like that. And just come back at another time. Don't look at it every day. You're going to be frustrated trying to watch it every day, but the long-term movements like weekly, daily time frames, they are killer. Okay? They are absolutely killer if you're able to catch the bottom. Because if you remember, this is the last thing I'll say and then we'll hop off here. If you guys remember, oh shit, that's right. We'll continue on the lesson then. This is the last thing. You remember how I told you about Dow, right? How there's an imbalance below the lows, right? Why do you think I was saying when we got a new low below 36 on Wells Fargo that I would long that? Everyone thought all the banking sectors were going to collapse. Well, a few of them actually did. You know, the PNC or whatever the fuck, SVB, whatever over in California. Of course, it's California, right? You know, banking sector was on fire, all this and that. And I don't know of anyone else. I don't know of any fucking one else except for me who said, I'm going to long below that low. Why? Because we had a monthly imbalance below a monthly low. That's why. That's why it's easy to go against the crowd. Because when you realize over the years that most people are wrong at turning points in the marketplace, you can use that to your advantage. So it was like 1 or 2 weeks before I said, if we smack that low, I'm buying. Dude, that's our current low. That is our current low. We almost got there back in on the May 4th. We came close, but we never came back down there. Now we're back above 40 again. Who else do you know? Serious question. Who else do you know was trying to long banking sectors back in late March? Who? I sound like an owl right now. Who was doing it, bro? And then like 2 or 3 days before their earnings, I talked about it. Right? That's why. Look at this. Weekly time frame, okay? What is this? Short-term lows in December, right? Or it might even be equal lows. Equal lows in December, okay? What's below that? What's below that? An imbalance. Huh. An imbalance below an old low. That happens to be the low. Look at that daily time frame. Look at that. From the 124s up to the 140s in only like a month or two. It's not difficult, guys. It's not difficult. It takes a long ass time is what it does. Okay. It just takes a long time. All right. But from that imbalance, you could have been wrong a little bit. Where it's at today, 11%. Okay. Even at earnings, that was 28 days. 19 bars, 28 days. So that's 19 trading days. That's 28 calendar days. 10%. 10%. Again, that's not getting the greatest entry. If you held through earnings, that's 10% in less than 1 calendar month. And no bank is going to offer you 10% on a return in like a year. But you got to wait for these higher time frame setups because people get scared, bro. And it is scary. I'll agree. It's scary looking at this. Market's been down for 3 weeks consecutively. And all the idiots on CNBC or fucking whatever programs are out there, I don't know, Jim Cramer and whoever else, they're saying that, you know, banks are going to shit. No. Not on my channel, not on my Twitter, because I talked about it on Twitter as well. It was actually right there, that first one. April 26th. I talked about that on that day. So it did come down a little bit, but now we're back up again. So my timing's not always the greatest. I'm not super perfect always when it comes to the long-term plays. But if you can handle a little bit of heat, you're good, man. You're good. All right. So study that. I showed you in closing, low time frame, imbalances below lows, and higher time frame, imbalances below lows. From futures to stocks to whatever. Okay. So study that concept because it might be important. I mean, look at the fucking chart. What's the chart telling you? The chart is telling you that this is our current low of the year. Okay? Wouldn't that be important to know? And I'm not saying you got to long that, but these short-term retracements or like this retracement in here, buying low, selling high. All right? So that is what I'm going to leave you guys with. Be blessed. I will see you guys tomorrow at 1 p.m. Eastern for our Friday session. Guys, if you got some value, drop a like. I would greatly appreciate that. If you guys haven't become a member already, you can become a member today by getting a tier 1 or tier 2 membership. They're very cheap. Okay. You get a sniper next to your name, chat emojis, community posts, and a whole bunch of other stuff. Cool shit. All right. So be blessed. I will see you guys tomorrow.